Here we go. Greetings to you, value investors, day traders, swing traders, hype dorks, disruption people. Across the fruited plain, let's do this. All right. So somebody asked me about Facebook. I didn't even look into this. Facebook, Instagram, this is not what the story is about, but yesterday, Instagram, Facebook, WhatsApp were all shut down. There was speculation out there by all of the networks of exactly what it was. I have no idea. People say it was China. Don't really care. Let's look at this Facebook whistleblowers thing. I haven't read this story. I'm just going to breeze through it on the fly, so bear with me. Facebook former employee Francis Haugen will testify on Capitol Hill about internal documents leaked to the Wall Street Journal exposing the social network's knowledge as its platform is riddled with flaws that cause harm. What does that even mean? Hold on a second. What does that even mean? I mean, what do you expect to get from... When you go to a website like Facebook, where everybody can vomit all of their stupid opinions that they have, what the hell do you expect to get from something like that? It's a network of 2 billion people that spit out garbage nonstop, from what their dumb opinions are, to what their kids are doing, to this and that. What do you expect to happen on a platform like that? Maybe I woke up on the wrong side of the bed this morning. I feel like I'm a little bit crabby. Anyways, she did an interview with the federal judge. They put in here something about she's testifying at 10 a.m. She's being grilled by a subcommittee over accusations that it has taken a page from Big Tobacco, hiding research that the products are harmful. I guess they're propagating hate speech, but it's only if you come from one side of the aisle. Probably shouldn't have said that. And frankly, I don't know. To me, go and look at Facebook, and it can be a value play from some kind of perspective, I'm sure. I would have to guess that the value is somewhere in the 200 range. I mean, they print cash. They're a good company. I don't know. I don't know what else to say about this. I'm going to stop talking about this because it's just going to piss me off. All right. let's go to the next thing. What do I want to talk about first? I'm sure you came here to see me be really crabby at 9 o'clock in the morning, Eastern time. All right. Worst California oil spill in 27 years. The reason I bring this up is because the reason you're not happy with Facebook. I haven't had a Facebook since 2012. The day after the 2012, I just couldn't take it anymore. I literally couldn't take it anymore. I have not opened a Facebook ever since because it is stupid. And people just... Ugh. All right. The reason I'm bringing this story up, there was an oil spill in California. This company, Amplify Energy Corp, dropped as much as 53% yesterday. So my point of bringing this up is go and day trade this, go and swing trade this, what have you. Dropping 53% because of spilling oil into the ocean, it's going to be fine in the long run. Look at what BP did in the long run. BP spilled a lot more than 3,000 barrels and everything turned out okay for them. So go check this out, guys. It will benefit you. I don't really have anything else to say about that. Supply chain. Where's the supply chain issues? Here we go. The supply chain is the perfect storm, says a logistics expert. So first and foremost, customers' expectations have risen in only one direction, and that's up. We want things. Second, the capacity constraints. There are limitations to the supply chain network in terms of quantity of drivers, the ability to ship things within the United States and abroad. Guys, there are so many ships sitting out there on the water and the price. So I was telling you about that little graph yesterday. I didn't find that exact graph, but I found a graph that I wanted to show you. That's correct, D. Snave. Very good. Very good. All right. D. Snave nailed it. All right. Third, things are complex in the supply chain. In his view, the process of turning raw materials into finished goods and bringing them to a consumer's home across the globe relies on a whole bunch of independencies and logistics that have reached a point that the existing software data and tools to make their jobs a reality are really strained. Delays are up over 425% year over year. Shipping containers have been sitting out there. So take a look at this chart, guys. If you look at what a shipping container costs, let's see. China to the United States to the West Coast. This is this red line. Back in January, we're going to call it $4,000. Just last month, it was eclipsing $20,000. If you want to look to the East Coast, maybe call it $5,800, $5,600. And now we're at about $21,500, $21,700 for that same container. So if you think that your price of goods are not going to keep going up, oh, they are. Oh, they are. I sure hope the oil spill here in California doesn't affect the sewage polluted beaches. If you add sewage to sewage, does it cancel out the previous sewage? Gold. Futures retreat as the dollar and the treasury yields are climbing. So this is an epic picture. This is awesome. It was funny. We were talking in the Bid and Ask Nation yesterday, and I was saying that it's funny to me that I'm finally seeing gold run against the stock market. So typically, what you would see is when the stock market would increase, it's not that gold would drastically decrease, but gold would be neutral or it would start trickling against the market. It would be the opposite because it is theoretically, the hedge against market damage. So we started to see that yesterday. So that was interesting. I was very happy to see that. But Monday's gains, gold were at least partly attributed to the China and Taiwan issue. So this goes to trade. And this is the difficult part when I always say to you guys, don't trade gold. It's very hard just because it's very geopolitical. You see that we're bringing in China, Taiwan talk, then we're talking about other political things. It's just not worth it for me to go and trade gold. If you want to do it as a long-term investment, have at it. But it's just so geopolitical that you're going to get so much volatility in there that you're going to get crushed. That's the reason I don't like trading commodities. So you guys do whatever you like to do, but I really do not like trading commodities just for that volatility reason. Gold's like, yeah, okay, that's it on gold. Let's go to the next. Janet Yellen said she's talking about the recession. So this is an interesting. Am I in a gold stock? Yeah, I'm invested in GDXJ. AU, I think, but two negatives make a positive. So the U.S. faces a recession if Congress doesn't add to the debt ceiling. Basically, we have 2 weeks. It comes down to, what's today's date? The 5th. It comes down to the 18th. Treasury Secretary Janet Yellen, former Fed chair, on Tuesday said she believes the economy will fall into a recession. I think it'll be a depression if Congress fails to address the borrowing limit before an unprecedented default on the U.S. debt. The date is October 18th. U.S. Treasury Secretary has had a long view of so basically what she's saying here is that treasuries for the U.S. have been very secure for a very long time. Guys, don't worry. When you look at this, they're going to raise the debt ceiling. They've done it 30 plus times since 1960. They've never not raised the debt ceiling. When you can't pay your bills, you just raise the debt ceiling and everything is what the young kids say, Gucci. What else? Inflation. This is a good one. Inflation. Why would you be skeptical? So this kid wrote an article about 4 months ago talking about how he did not think that inflation was transitory. He was on the side of the Federal Reserve. One inflation measure, the Consumer Personal Consumption Expenditure Index, was reported on October 1st to have climbed in August by greater than a forecast by then 0.4%. Over the last 12 months, that PCE number index has risen by 4.3%, its highest rate since 1991. Jerome Powell has finally come out of the camp of saying that inflation is not transitory because he's worried about supply chain issues that are going to be very, very long lasting and that are going to likely get worse. So he broke this down, and actually it was the Cleveland Fed chair. They put together a model based on inflation. And if you look at what they think, their projection for inflation right here, is that the CPI inflation would adjust to 1.58% annualized over the subsequent 10 years. That was 4 months ago. Their latest reading ticked up just five basis points. So they're still in that camp. He said that for the past 20 years, this has been the most accurate one coming out of the Cleveland Fed. If you want to pull up this article, here's the title of it. This is from MarketWatch, Opinion, Why You Should Be Skeptical About Inflation. There's a link in here. This model created, if you want to read the model and go into it, I know Matt Chescoles, he probably wants to go into it. He's a statistician. But if you want to look into that, you can really do a deep dive into why it's better. They say that this model is superior because it has a number of inputs, including treasury yields, surveys of professional forecasters, and inflation swaps, which are derivatives in which one party to the transaction agrees to swap a fixed payment in return for payments tied to the inflation rate. So that is that. And yeah. Okay, here's the FANGs. This is another interesting story. The FANG dominance is too hard to overcome as a 10% correction looms. So right now, the market is down 9.2%. Of course, it's up this morning, but 9.2% overall, and a 10% is quote unquote correction territory. Over 20% is technically a bear market. And yes, net ghost. You made me laugh with that one. Let's see here. So none of the reopening, oil prices, COVID treatments, etc. That's what they're pointing to, but none of that seemed to matter once the tech mega caps got buckled on Monday and really last week. I mean, last week they got pummeled. The S&P erased its Friday's bounce, sinking 1.3% to its lowest level since July and retreating below its 100-day moving average. That's not good. And if you don't know, the FANGs are Facebook, Amazon, Apple, Netflix, Google, and I don't know why Microsoft is not in there, but I always call it FANG M because Microsoft should be in there. If you exclude the FANG's losses on Monday, the S&P 500 would have been almost halved. That's how influential they are. If you look at the overall market, the FANGs since 2015 are responsible for 45% of this run-up of the entire market. 6 companies are responsible for it. The dominance of these tech companies are a double-edged sword. Throughout the pandemic, these stocks did most of the heavy lifting, but what goes up must come down in this group. It could be a drag on the market. Amazon slipped for a 6th straight day, the longest stretch since August of 2019, and again turned into a negative for the year. The 5 biggest, the big 5's weight on the S&P has almost doubled. The next largest, those 5 stocks, the FANGs, those 5 stocks are almost double the entire healthcare industry. So, geez, it's incredible. And also to note, I've got to ring the bell. Kathy Wood this year, I just looked at her portfolio this morning, down a negative 14%. Not trailing the market by 14%, negative 14%. So disrupt on, everybody. Disrupt on. Do I want to talk about this? No, I'm not going to talk about that one. That one's kind of boring. All right, let's see what the market's doing. Facebook's up almost a percentage point. The futures are up. This is wonderful. We just got to keep rolling on. All right. That wasn't supposed to happen. Hold on. Okay, let's look at the yields. 1.5, basically. Anything? Pepsi reported this morning. Let's see. I'm just looking out to see if there's anything that I ever see in the bid and ask where people... Guys, Thursday, before the bell, Conagra reports. I know a few of you are in Conagra. If you want to join the Everything Money community, $7 gets you in our Discord. $28 right now gets you our software. Gets you into the Discord community, 6,200, 6,400 people. It's really growing and it's very well organized. It's great. If you want to join the Bid and Ask Nation, that's with me. $78 a month gets you that. You get exclusive trading channels and so forth. If you want to join Pulse Super Shorts on a monthly basis, it's $500 to jump in there. Right now, there's about 45 members. It's a really tight-knit community. Very beneficial. And if you want to do a one-on-one trading session with me, I know I have one tomorrow. I have one... I think I have one also on Friday. I can't remember. No, I don't have one Friday. Anyways, I think I have one next week. $750 gets you a 1-hour Zoom session with me. We talk about whatever you want, but I really like to talk about trading, and I hope the guy tomorrow, I think his name is David. I hope he brings great questions tomorrow. And if you want to do a real estate deal with Paul, $10,000 for 1 hour. 4 hours of his time, $2,500 an hour. And if you're doing a deal in this market and you've never done one before, yeesh. How much to have you sleep in my basement? Well, it's not creepy because it's coming from Matt. It's a little bit creepy, but if you give me the bench, I'll sleep on the bench. Give me some stocks, guys. I will start ripping through them, and we will go from there. ARK by the dip. Why don't we look at ARK? Let's see here. Let's pull this up. ARKK. ARK Innovation. Innovation to your soul. All right, let's see here. We have, this was the high, and this was this January? February? Mid-February? So mid-February, they hit a high of $159.70. Right now, it's going to open the day at $107.71. I mean, the whole market's up this year. I thought that disruption was the thing. Weird. I mean, it's a great downtrend. You're holding this support level right here that dates back to maybe March and April. But you're going to make a run. If you break through that, you're going to make a run below $100. And that, in fact, is disruptive AF. Can you look at Navi, Student Loans Company? Why not? Navi. I would have guessed that was Garmin. I don't remember. I thought Garmin had a cool ticker. Okay, let's see. Oh, they've been beaten up. What, are people not paying their student loans or something? All right, so they got smoked as of late. This is a really good looking trend. So here's what I would tell you. I really like what's happening here. You've had a little bit of the pullback already, which is great. So you've kind of created that W formation to create that level of resistance to get through. If you get this yellow line today, if you get something like, let's call it this today, you can absolutely short this thing, because what you need to do is break through that level right there. And if you get through it with the yellow line moving into the sweet spot, you can go ahead and do something with it, and you'll probably be able to run it down to the 200-day moving average. So this is a really good looking stock. Just make sure you're paying attention to your bid and ask on this one. When you get crazy volatility like this and crazy volume, make sure you're paying attention to your bid and ask differentiano. Little Spanish lingo for you there. Uber. So Uber, all right, so they gapped up. Let's see here. So what's happening? We noticed that it's just kind of stuck right there, right? And all we're going to do is just take a peek over here, and we're just really stuck right on our 100-day moving average. So it's no surprise. And if you look at the volume here, over the last 2, 3, 5, 7, 8 sessions, we have not touched average volume. So it's no surprise that it can't get through the 100-day moving average. It needs to get a lot of volume and bust through the 100-day. The good news As soon as this yellow line gets into the sweet spot, I think what this means is that we're just lacking volume. As soon as that gets through the sweet spot, making an engulfing candlestick like that, I think you'll probably have a little bit of a run on Uber up to the 200, but I think you're going to run into the same issue here. You're going to just keep bumping into the 200 the same way you're bumping into the 100. So just be careful with that. And let's see here. Who's smoking? I'm not smoking. Maybe it's just me, but I absolutely love it when Mo says they get smoked. Thank you, Seth. All right, Tesla. Why don't we look at Tesla? Tesla reported very good returns on cars, and that's the point. I said it yesterday. I just want to double down on it. Guys, a company like Tesla, I've always said, why don't you hear it in all the videos that we record. I say, why don't we just wait for these companies to mature? And then when they get to the point of getting finally, for example, Tesla, good deliveries on cars. They're delivering their product. They're generating some money, and it's becoming a consistent quarter-to-quarter thing. Then you start looking at the company. Granted, I'm not going to look at this company because the price is totally out of whack. But if people like Hype Dorks didn't just flush to these stocks, these prices wouldn't be out of whack. We would be getting to a point where the business is doing very well. Then we can start looking at the company and going and buying the company. Unfortunately, we're not going to see that for a long time with Tesla, but they delivered, I think it was around 240,000, maybe it was 260,000 cars. They delivered a car to everybody in America except for me. So I have a vendetta to pick against them. Just kidding. All right, so this is looking pretty decent. Let me scroll out just a touch. I just want to see, okay, so I'm glad I did that because you can see it's running back to right here, and this is where you're facing a little bit of that resistance. So your trend is starting to tip up top, coupled with the dailies falling off a little bit. I wouldn't go long on this thing right now. Wouldn't go long. I think it's just going to probably consolidate in this range. Just to me, don't touch this thing. Go day trade it. I don't see a point of hitting it from a daily side either. But all right, who wouldn't want to make SO? No, let's do Dropbox. I haven't done that one in a while. All right, so I'm assuming that you wanted to talk about this one because they've been hit pretty badly lately. So if you look and draw this line straight back, wait, I need yellow. Go right there. You're at the support level because you hit a little bit here with that little spike pulled back, consolidated a couple of days. It tried to make it through that level twice in the past year or so. So what we need to do here, if you get an engulfing candlestick down, you can go ahead and short this thing. That's for sure. The trend is looking good. It's a little bit steep, but it's looking good. You're probably going to get held up at the 200, so be very conscientious of that. Man, hold on. Let me see. Hold on. Redact. I'll sign a document to redact my previous statements. All right. Because of the steepness of this, you notice how it's just dropping really, really hard. I like to see something that is a lot more gradual like so from the red line coming through the sweet spot. The fact that we've dropped straight down, it worries me. It worries me to say that it's going to hit this resistance point, this support level that I just drew, and it's going to bounce back up. So give it a couple more days. Give it a couple days and see what happens. Maybe this red line starts tilting and going like this. And if it does start going like that, then you can go and do something with that. So I redacted my comments, sign it, talk to my lawyer. I did everything while I was still speaking to you guys. So be careful. Nike has filled the gap. The trend, I do assume that Nike is going to spin over pretty recently and pretty soon and do a sweet spot reversal. It has filled the gap that was right here after their earnings report last quarter, the previous quarter. They just reported earnings here, but that was the previous quarter. So that was a really good looking short. The gap has been filled. I think that this will start to I think it'll do a sweet spot reversal, especially because it's just sitting right at the 200-day moving average. If you want to come over here and swing trade this, let the red line get into the sweet spot and move up. It's looking very, very good. I'm actually really loving what I'm seeing with Nike right now. Next, CGXX. Okay, this is Consolidation Central. And it's tough because you're just bouncing between the 100-day and 200-day. Let me squat down a little bit. And you are just consolidating hard, and that's all you're doing. So we're just waiting for this to choose a direction. What's our volume here? rather low volume, rather low average volume. 500. I'm going to call it 560,000 shares traded on a regular basis. So you know this. Red line needs to get in the sweet spot. Yellow line needs to follow. It's going to be very tough for you. On a stock like this with pretty low volume that consolidates like this, you can see that each time it breaks through, it has struggled to get through the 100-day moving average once, twice, 3 times, and 4 times just in the past 2.5 months. So be careful with this one. I think there's better options out there for you. Next. Nike. I do love Nike. I have a bunch of Nike stuff coming today. I got some new shoes. I got some new shirts. I got a new hat that I don't need. But why not? They gave me a birthday coupon. I had to use it. All right. So I'm just going back and just drawing circles around where I see different levels of consolidation that previously happened. We're seeing it again right here with United. With United, I would not do anything long-term until that yellow line got into the sweet spot. And I hope it goes in this direction that I just drew. So we have that great separation between the red and yellow that gives a consensus that the trend is really good. Over here, I don't think I would do something with this just because I worry about getting pulled back down to the 100 and 200 because your stochastic is so overbought. Your volume can fall off at any second. So keep an eye on it for a long-term holding, but not a short-term. Next, can you explain how the gap filled on Nike it seemed to only fill halfway? So good question. So here's my gap that I'm looking at. So I'm going to draw a circle here. Can you see this? Hold on a second. I need to see on YouTube. Okay, you're good. You see it. So yes, you see gap to here to here. But what I see is this thing gapped up and it filled this gap right here. So the gap right there was filled. And that is about as far as I think it's going to get. Now, can this fill? Yeah, absolutely. But in the immediate term, the gap was filled for what I was looking for. I would have loved for it to come down to $136, but I just don't think that's realistic with the 200-day moving average being there. I could be totally wrong, but to me, that's the gap that I saw filled dating back to, I'm going to call it March or February, whatever that little blip was. CMG, Chipotle. Has anybody tried the brisket? My friend Nick, who's staying with me right now, he's in my dining room to the left of me, has told me that the brisket is pretty good. All right, what I like is, what do I like here? Okay, so we're consolidating for sure. Trend is starting to move down. If you have been in this at all and you've caught this run up, take your profits off the table. I'm not saying exit the position yet. It's getting there because you've blown through the 25 and 50-day moving average. Your next stop is 100. You are pretty steep decline going on right now. I don't know what the deal is, but be careful here. At least take your profits off the table if you've caught this run up. With that being said, if you want to short this, let the red line, make sure you get it into the sweet spot. Let the yellow line follow. You might have a pretty nice short. There is a little bit of a gap here to fill. Hey, I bet you get down to the 100, especially if everything goes south. If everything goes south in this economy, fast food places will struggle. Trust me. Fast food places will struggle. What month is it? October, November? All right, so next month, I said this about maybe 2 months ago. I'm going to put together a Christmas list that I like to stocks that I like to see over Christmas. And if you want to write down a couple right now, I really like to see Costco around Christmas, although they might struggle a little bit with all these shipping issues. Ralph Lauren, Restoration Hardware. Tiffany is no longer Tiffany because they got bought by Louis Vuitton, but you can look at Louis Vuitton if you want to trade. So any kind of luxury kind of deal, those are the kind of companies that I like to look for. Nordstrom might be a solid one. I don't know if Saks is public, but something like that. But you guys give me some ideas, and we'll talk about them. But I'm going to put together a Christmas list for you guys. Okay. Sorry, Mo, if you've done IBM. What's your current favorite long-term investment? Apple. Love of Apple. Apple's my favorite long-term investment. Let's see here. So with IBM, you're facing resistance here and here, and basically the 100-day moving average. So whoever asked me this question, I just can't see your name right now. I just can't remember who it was. If this gets into the sweet spot, fine, but you need the yellow line to follow. You need the yellow line to follow. And with you being this overbought and that steep of an increase on your daily, be very careful with this one, because that is a quick run up. Actually, let me pull up a line chart, because I just want to see if this is a flagpole. You're pretty good. I mean, it could drop down to $139, but it's not terrible. Not terrible at all. But just this one you got to be very patient on, because you got to get the yellow line moving too. Next, Costco is buying their own shipping containers to weather the storm. That's what I've heard. Problem is, got to ship them. You can buy all the containers you want. Are they going to buy their own boats? I don't know. I don't even know how boating works. It's not like I don't know how like big vessels work, because if you think about the FAA with how you fly planes, you can't. Well, nobody can just take a plane in the air without telling the FAA. But I know it's not like that for boats. But when it comes to those big shipping containers, do we have something that talks about the water? I really don't know. Guys, smash the like button for me. Let's get this thing to 200 before we end the show. We failed yesterday. I smashed the like button just now. Okay. Visa V. Remember those pens that the teacher would write on the overhead projector with? So get this thing moving into the sweet spot. Yellow line, same thing. We're seeing this with so many stocks. This is why I keep saying this is the hardest market I have traded in 18 years of doing this. It is so difficult. You are just seeing insane bouncing around from your daily stochastic. Your weekly stochastic, there's no consensus. You're facing tons and tons of support and resistance lines. You're sitting between all these moving averages. Everything is just a disaster right now. It's so hard to do this. But just learn it, because once you learn it, you will not forget it, and you will be very greatly benefited in the future. Pfizer, PFE. Pfizer down from 50 to 42. Well, what do you want to do? When you have one company, when you're a very good company and you hedge your entire life, the stock market's now open, and you hedge your entire life on one drug from one event and don't focus on your core business, which is viruses, that they were very good at, that they are very good at. They're the virus leader in the world. And this is what's going to happen. If you're trying to drive stock price, it's going to come down every single time it's tried. So they're down, still a downtrend. If you get an engulfing candlestick to take out that wick from Friday, you can probably short this thing down to the 200-day moving average. This is so funny. I bought this thing back at around $40, and it's coming all the way back down here. All right, Ron, last stock I'm going to look at. I'm going to do you a favor. He said, I need to get out of a bad stock that I need help getting out of this thing. Let's see. All right. Well, Ron, I don't know what to tell you. I need more information. I know you're in the bid and ask. Please give me a little more information, because from a long-term perspective, you shouldn't be in this. Now, a daily, you're in that overbought area, but you might have some room to run. This thing might be able to get up to the 100-day moving average. It's possible. It's very possible. But, Ron, give me a little more details in the Discord, and we'll go from there. So, all right, guys, I'll be back 23 and a half hours from now. We'll do this all over again. But until then, I'll see you at 2 o'clock today on the afternoon live stream. Me, Paul, Seth. Don't forget about the book club on Friday. Well, I don't know what time it's at in my head, but it's on Friday morning. I'll tell you about it. Chapters 5, 6, and 7 of The Psychology of Money. Join Paul and I, and that's about it. You guys have a wonderful day. See you at 2. Peace.